All right, Dave, what is something that you would never do on your own tax return?
Wow. Okay. Phenomenal question. What I would never do on my own tax return, I would not have multiple years of losses reported on a Schedule C, which is where you report self-employment income. It is an absolute trigger, and it is the most audited, scrutinized part of a 1040 tax return. And to show year after year after year consecutively of losses, albeit they could be bona fide and businesses lose money in the beginning. Typically you're not always profitable, and it takes several years to either determine if the idea was good or not. But booking multiple years of consecutive losses is something that you should absolutely have the documentation buttoned up, because eventually the IRS or any rational actor would say, while you're still doing this job, all you're doing is losing money at it. Is that real? And then that's something that could absolutely trigger an audit and put you under additional scrutiny. And again, for the second time, you're allowed to lose money in business. That's just part of business. And I tell my clients that just make sure you have solid books, solid records of a track record and accountability of all of the investment of capital and where that money was deployed, and make sure it's just ready to go. God forbid the IRS does ask for documentation or supporting evidence for those expenses and why that loss is consistent. A couple of clicks of, a QuickBooks program, and you can send over a bona fide P&L with bank statements and credit card receipts.